Hey, good day, everyone. This is Mr. InfoFxmosako. I'm welcoming you to yet another recap video for the first week of January trades and analysis that we did previously. So before we get to it, I'd just like you guys to remind you guys to press the subscribe button, to press the notification button, and the like button so that we can reach more people and a broader audience, guys. So yeah, let's start. So I'm going to start with EURUSD. There are three pairs that I analyzed, and I said that there's a great probability of them doing what we expect them to do, which was the EURUSD, USDCHF, and Gold USD. So I'll be starting with EURUSD. So basically, looking at the current market structure and looking at the past, and plus it breaking through this resistance turned support, I was hoping that it was going to come and hit this major resistance here at the top, which would have made it a double top. Now, as you know, we always go and check what's happening in the market. You go to the current market to check the current market price, and that's what you're going to trade. And my current market price was showing me this structure. And as you can see, the previous week's candlestick was a shooting star, or you can call it a morning star, but I know it as a reversal candlestick. And sometimes when you see such a candlestick, it has to be filled up. You know, it has to be filled up because it just shows that the sellers were in control. But sometimes this wick here has to be filled up by the candle that's going to come after it. But then my whole bias was it being a buy and aiming to come hit this resistance. So now let's go to the lower time frames and see what we can find. As you can see, I was able to find a channel as well within the pair here, the structure, and it's a support and resistance, guys, a minor one, which is great because it made me be able to see the market properly now. You know, when I was analyzing at the start of the week, I didn't see it like this, guys, honestly. But yeah, as I can see, it touched twice the resistance, and once the support since the previous week. So this blue here, it's stating the 4th of January, which was the first week of trading this year properly on a Monday. Now seeing this and knowing what I saw on my weekly buys, which I wanted to buy, I need to come to the 4th so I can see the proper market structure and make sure that the trade I'll be getting into is solid. And as you can see here, guys, it's even better, the structure. As you can see, it's more obvious. And for me, when I was analyzing earlier during the week, you know, it felt like I was in the middle of nowhere, trading in the middle of nowhere. Sure, it went up, as you can see, it passed this area here and it came back to retest and it went up. And in my mind, I was just looking for a buy. So anything that, you know, like coming back or breaking through, that's what I was looking for. And now, guys, I'm also building a trading plan, and my trading plan doesn't allow for me to just enter at random places, guys. Like, you see, I need to have proper structures, support, resistance, support structures, and I need to enter on the resistance structure or the support structure. And as you can see, guys, I just got in here. This is the reason why, actually here, this is the reason why I got in, guys. Right here, as you can see, it went down. Then there was this candlestick here. Then I knew that here I need to get in. And you will only see as we go to the lower time frame why it was valid for me to get in here. And here I wrote that on the 1 hour still on the 4 hour, I should have been patient. I should have been patient and just waited, guys, instead of entering here. Instead of entering here, I should have been patient to wait until it hit here. But because I didn't have the channel when I was analyzing, I wasn't able to see that. So that's a mistake that was made during our analysis. So now I come on the hourly, and as you can see, guys, this is a beautiful structure, guys. It's a have waited for a second touch, a gap happened. Oh, all right. But this is one of the best reversal signals you will get, or patterns, candlestick patterns that you will get. As you can see, it respected the resistance line, and now it is going up. And if I wasn't rushing, let me just take that out, I could have entered here. Could have entered here, you know, or even better, somewhere around here, so that my stop loss couldn't have been that far. But then you'll only be able to see it on the 15-minute time frame. So guys, I've realized I'm a day trader and a swing trader. I'm a day trader and a swing trader. So I analyze, my bias comes from the weekly, then my daily and 4 hour, I realized that that's for structure. My daily and fourth hourly, the hour and 15 minutes are also for entry, you know. So the 4th hour, the 1 hour and 15 minutes, I use them for entry as well, but also for structure as well, for the 4th hour structure, the hourly structure as well. Yeah, as you can see, guys, here I could have entered right here. You see, look, this is a beautiful morning star, guys. Beautiful morning star, or a shooting star. You know, I'm saying it would have been a shooting star if it was at the top, but because it's here, I'm saying it's a morning star because it's at the bottom. I could have entered exactly right here and put my stop loss here and said, you know what, I'm going to ride this until it hits at the top there. But obviously I would love to have a proper 1-to-3 risk ratio, guys. So let me just do it for you here, a 3-to-1. Yeah, perfect. See, guys, if I put it, it would have hit my take profit and that would have been perfect, right? As you can see, this is what we could have done if I had patience and waited for the market to hit here. And what's even better, this could have been your take profit 1, and you could have pushed this up until the resistance level, guys. And also here, what I didn't see was this gap here, which wasn't filled. Gaps are always filled. When a gap happens in the market, it's always going to be filled, and I didn't notice that. And if I did, I would have known that, okay, eventually, because it hasn't been filled, it's going to come back. And that could have been a confluence for me, which I would have said, okay, it touched here, touched the resistance for the second time, right? And it needs to come back down here and touch for the second time as well. And that could have been my confluence to be like, okay, I agree that it has to come back here. Then when it comes here, that's when I'm going to take my trade to the upside. And when I mean confluence, guys, I mean, you know, if you're gonna say a trade is going up or down, you have to have many reasons why. You know, it could be a trend line, like, you know, like here an example, it touched here. Every time I trade off a support or a resistance, I need to have a reversal candlestick that's showing me, okay, there's a reversal that's going to happen. What's even better, it's reversing at a strong support structure, which is my second, reason to enter. And my third reason could have been the gap. There is a gap that has happened that needs to be filled, which it was filled. And also, I could also add on the third reason as well is a second touch had to be hit on the support. And that's when I would take the trade as well. So confluence, guys, you need to have many reasons for you to take a trade, or for you to say, okay, this is going to get there. You can't just say it's going to get there, only have one reason. So now we have Euro USD. Check. Let's go to USDCHF, which I also said here. I wrote that I could have been patient. Yeah, I'll start here. As you can see, guys, it's in a range, but in a weekly range. And what I was thinking was, because it has hit the resistance and it's coming back down, it needs to come and hit the strong support level, which it hasn't touched since the 15th. Yeah, well, let's just be sure. The 19th, January 15th. No, the 19th January 2015. That was the last time. And because it respected it here, I thought it was gonna come and hit here. And as you can see, guys, you always go to the current market. You look at the current market. As much as this is giving me information of what has happened in the past, the current market is important, because also, guys, don't forget there are things that happen within the current weeks. There's new news, there are events that have happened. So whatever happened, like here, the news may be different to what's happening here, and the way the economy was here and here, it could have been different. So when I was looking at analyzing, I was telling myself that yes, it's definitely going to come here, and I'm going to wait for it to break through this structure here. So now let's go to the daily, and here I said I wrote down I could have been more patient, and I traded in the middle of nowhere. Basically, this is in the middle of nowhere in a way, especially when you're looking at a higher time frame, guys. It's, for me, especially now, because I'm gonna say this again, in my trading plan, a trading plan is important, because you're gonna set a certain rules for yourself, for you to know, okay, this is solid and I'm going to enter here. And you have entry rules. What do you see that's going to motivate you to enter this market? And also the risk to reward as well. All of those things need to work together. And here I was really convinced that if it breaks through here, it's going to go down there. As you can see, currently it hits here, then it went back and hit the resistance again, and it came here and it broke through. And look at this candlestick here, guys. Also, I could have been a bit patient as well. I could have been patient and traded this doji candlestick here, which always shows signals undecisiveness between the buyers and the sellers. But as you can see, when the second candlestick came around, the buyers were in control. I could have waited for that signal, So now let's go to the 4-hour to see clearly. I put this here for a reason, and I'll tell you guys now. For me, guys, honestly, I feel like this trade, I shouldn't have taken it, because it's a force. I forced, but also, if I had taken it, I would have taken it based as an intraday trade or a scalp instead of a swing. I was looking at a swing, as you can see here. I was looking at a swing. And the pips were a lot, guys. The pips, let's even check here. The pips were going to cover. Yeah, look at that. Over 800 pips. Now I want to go to the to the 4 hour, to the 1 hour, so that we can get a clear picture. And I would say I was correct in a way, you know. It's just that because I was looking at it from a swing entry perspective, and I didn't look at it from an intraday perspective, saying, okay, I think these are the pips I'm willing to get, you know, because I'm not sure, 100% sure that it might even hit there. And this looks like a you would say a false breaker, you know. It's a false breaker. Sorry. Okay, here it doesn't show it properly, but as you go to the data, you can see it. It would look like it looks like a false breakout, you see. But then let's go to the hour. I don't know what's happening. It's so slow. Yeah, guys, I could have actually, as you can see, I could have entered here, but you'll see it properly on the 15-minute chart. As you can see, guys, I told you guys that the market structure, I go to the lower time frame to see the market structure, and I use the what do you call this, the 15-minute as well to enter the market. So I use the 4th hour, the hourly, and the 15-minute to check the my entry, my entries. So I apologize, my internet just stopped. I will continue right now after this. All right, okay. We are back again. Apologies for that. The internet got disconnected, network problems. But anywho, yeah, guys, like I was saying, I based this entry off a swing, you know, and I should have just paid more attention on how many pips I could have covered, and also my risk to reward. And also looking at that, as you can see, there's a level here, guys. I could have seen this level. You see this level here? If I had entered here, when I entered here, I should have seen that this is a level that has been tested, and it was a previously strong one, recently strong one, right? So if I entered here, I could have seen I could have came here to hit it here, and knowing, looking at how many pips are you know, it covers it's covering. Let's see how many pips it took from what time. Okay, I entered here right at 8 o'clock. I was in the market. So how many hours does it take? 1, 2, 3, 2, actually 2 hours. You know, if I had seen properly the market, I would have known that this is an intraday trade, and it's not a swing whereby I would have been holding it for a couple of days. So I was going to hold this one for a couple of minutes. Now let's go to the 15 minutes just to have a proper view on it. See that, yo, it's a wonderful trade. Even caught it at the oh no, man, not here. Look here, beautiful. I caught it by the opening of the candlestick, which is always my aim, guys. I want to enter always by the opening of candlesticks, always, and the previous close, you know. As well, I love my entries. And you see, if I had known that, okay, this is going to be an intraday trade, I'm only going to be in it for a couple of hours, you know, it would have been a perfect trade, you know. But now I didn't know that, I wasn't aware of it, and I was looking at like the long-term move. And as you can see, basing it here, I was knocked out of the market, you know. I was knocked out of the market. I was knocked out. It went into profits a bit, then it went back up and took me out the market. um I didn't take this trade, but I did say it's a high probability one, you see. So if you were in this trade, you would have probably once it probably passed this level here, this 900 here, you have you would have actually went into break even. You would have pushed your stop loss to break even, then you would have been proper. Then depending also on the structure that you were seeing, if you're following up, you were going to put you're going to take your stop loss and put it at this structure here to make sure that you secure your profits, you know. But I really can't complain, but those are the things that I could have done to have had a proper trade, guys. This would have been a fantastic trade, actually. I just want to check something for y'all. It could have even been a 3-to-1 proper risk to reward ratio. I was looking at 2-to-1. I was looking honestly at 2-to-1. You see, let me make it proper. But yeah, 2-to-1, guys, and it would have been perfect. As you can see, it came and hit the support, and that would have been a perfect entry, guys, and a perfect trade, and you would have been out and happy, you know. And you would have waited. I would have waited until it came here again for me to enter the market, because I feel like right here for me, you know, it was a no man's land. And the price action, the previous one when it was here, it was years back. You know. Oh, you know what? I could have done this and waited for this to happen. As you can see, it retested a bit, and I could have entered here and put my stop loss below the wicks here, you know, and so I was gonna ride it until here. Even worse, I would have went up, because me, I always aim for a 3-to-1 risk to reward ratio. Yeah, around here. Then whatever happens next would have for me just been what do you call this, extra profits. You know, I would have just locked my profits. But you can see it retested here and kept on going up. You know, I could have also entered here. So yeah, guys, those are the possibilities and opportunities that we missed. This one, you can see it gave us great profits, which is great. I didn't take it though. I hope the ones that took it, please let me know and tell me how it went. So yeah, guys, now we're going to change and go to gold. Let's check out gold, because those are my high probability setups. Gold, I predicted that it was going to go up. I was looking at it going up, guys, honestly. And if I take this away, you can see there's this wick here. You know, I was looking at it going up. It breaking through the structure. As you can see, it touched. It was either it was going to respect the structure and come back down, or go up and hit this level. So for me, if it had to go up, it was going to hit this level until it came to hit this level. So I was always prepared for this area right here. And as you can see, guys, reversal candlestick here, proper reversal candlestick. You know, so that makes you aware of any form of you know, change of direction. As you can see, guys, it went out of this channel, it hit here, and that's when I was like, okay, this is going to be a breakout, you know. And I was looking for my 3-to-1 risk ratio reward. Then I was like, let me go to my 4th hour. And what did I write here? It was actually a false breakout. If you get to look at the weekly, you can see that it was a false breakout, you know, out of the structure, out of this channel structure. It was a false breakout. Double top. Oh yeah, on the daily, as you can see guys, it's a double top as well. Double top, double top. It came around this area, almost hit it, but it didn't. You know, let me just check. Yeah, almost hit that area. So it was almost double top, or it's a double top, you know. um then you know, you could have taken it as well, this trade, you know, you could have taken it to the downside, but because I didn't have Wi-Fi during the day, so I don't risk, guys. When I do not have my tools in order, you know, I don't take any trades. But as long as my analysis was correct and, you know, it did what I expected it to do, I'm happy. You know, I'm very happy. I'm just happy. So I know that if I had entered this trade, you know, it would have been perfect. Yeah, guys, as you can see, there was the area here that I saw it didn't break through. I knew that, okay, if it breaks through here, then I'm gonna take it, you know, and it broke through, and I was like, I'm getting in. And you'll only be able to see at the lower time frame that this was actually a perfect entry. See, guys, perfect entry, perfect, perfect, perfect. And I'm using a 3-to-1. This here, like if it had gotten here, this would have been my 3-to-1. You know, 3-to-1. Then I would have put my sell stop here, so that I'm locking my profits, and the rest would have just been, you know, extra profits. So we could have gotten those extra profits, and if I was able to be there by the time it happened, I would have taken it and went out the trade, and I would have been a happy chap. um Now as we go to the 15-minute, uh guys, it's even, you know, it's even worse. The entry, like, you can check that, okay, this was a proper resistance structure, respected. So, you know, if it's more than 3 touches, guys, with the trend line, with the line in general, 3 touches or more, expect something different. And that's what I was expecting, and I was able to take this trade, put your stop loss obviously below the wicks as well, so that if it does come, it doesn't take you out before making its initial move. And yeah, guys, I really can't complain. I hope you guys were able to see this and took advantage of this setup that I had. And this was a snapper entry, guys. This was a proper snapper entry. So now I'm done with the pairs that I said are going to have a proper high probability. EURUSD, USDCHF, and gold. So now I'm going to quickly go through GU. You see there's some sort of a shooting star, some sort of a shooting star, but I wouldn't necessarily call it a shooting star because the body is too big, you know. So now I'm gonna go to, as you can see, it's also somewhat in a structure. Sorry, I don't know why this is happening, why it's doing this. It's in a structure, as you can see, it's in a channel. So now let's go to the lower time frame. As you can see in the lower time frame, it's within another structure, which you'll only be able to see properly as I go to the lower time frame. But as you can see, guys, it touched here. This was its third touch. If you want to be more accurate, I'd say the second touch, because I wouldn't it didn't touch here properly. Then it came up here and touched here. So it touched here, then touched here, and then knowing that it touched here, obviously I'm waiting for it to come here to the resistance. So for me, it was a buy, right? But because of the current market. You always have to go to the current market. I was able to put it in a channel as well, which I never saw in the previous video. But now that I see it properly, look at the doji here, guys. The beautiful reversal candlestick, and it's here by my resistance area. This shows indecisiveness. The buyers and sellers were fighting, but they ended up at a stalemate. Then a red candlestick comes, which is a shooting star, another reversal candlestick, guys. Then here, this is where I would enter, and this would have been perfect because, like I told you, my trading plan, my entries, I like entering near the resistance or near the support with confirmations of reversal candlesticks. And it would have been a wonderful trade if I had gotten in and I had seen it like this, because I'm looking at buy trades. I was looking at a buy regarding this pair, but I could have taken this sell opportunity as it has showed me a wonderful reverse candlesticks, and it was even agreeing with my 3-to-1 risk to reward ratio. Here's a support structure, a strong one at that. Even it was respected here, as you can see. So yeah, guys, I'm so happy that I was correct. I was able to predict it like this. I'm disappointed that I wasn't able to take the trade because I would have made some monies, but I'm happy. As you can see, guys, it was an impulse, guys. As you go to the lower time frame, you can even see it more perfectly. And like I always do, guys, I like drawing this and making it making it seem like like it was ranging. So this is an area I was like, if it breaks through, it breaks throughs. It makes you a breakthrough. It's a breakthrough. I know that it's going to the downside. You see, guys, yeah, would have been perfect. But yeah, guys, the support level, the resistance, and the other support level, they all work together. This is the most perfect you can get, guys. You see, if something is like this, right, whereby this support in the structure, within the structure of the channel, is agreeing with the support here. So now that it is here, we should expect it to go up. There's a probability that it could go up or break through and go down here. So yeah, that's it for GBPUSD. If I was able to be there and had all my tools, I would have entered perfectly, and it would have taken me out. Hit my take profit, and we all would have been happy. So guys, I would just quickly like to just remind you to press the like button, the subscribe button, and the notification button so that we can reach a wider audience and help other people that might need help with forex trading and analysis as well. Now I'm done with GU. Let's go to GJ. And GJ here, I basically said just broke out of a range, which you can see here. This is a range that's been happening for a couple of weeks, and I was waiting for it to break through because it has to come. As you can see, guys, it's on a channel and it touched the support. And as you know, guys, after it touches the support, it needs to go touch the resistance. So this was a proper. I wouldn't have like I wouldn't have liked to trade within here. I don't know what's happening, honestly, guys. I wouldn't have liked to trade here, but because this was a proper structure, guys, I would prefer entering here and not like in the middle already of the move. But because I was able to see a proper support ranging structure, support and resistance, it's one of my strategies that I've put in my trading plan to trade. Now as we get in, you can see proper that it broke through. Just broke out of the range, and I was expecting it. I could have caught it. Let's see properly here. look here guys, perfect, candlestick, reversal candlestick, doji. And every time this happens, I would have entered here and went with it up. This is why I would have preferred my entry. But it's also okay guys, because here is a higher high that it can break through and I can enter there. Now let's go to the smaller time frame, the 4th hour, and here I said there was a double top, This was a strong resistance, as you can see, since December 24th. It's been, respecting this level here at the top and also here at the bottom. And this is a thing here, as you can see, it's a double bottom guys, a double bottom here with nice reversal candlesticks that are showing you change of direction. I could have entered here, you see guys, doji. I could have entered here like I told you and took it to the downside until here. I even put this here just to show you guys that also sort of been a proper risk to 3 to 1, but yeah, y'all can see it, and this would have been my second take profit, TP. And what's even better is I could have also entered the market here and went with it to the upside. But let's go to the hourly just to see the proper structure. Beautiful. It broke through. It even went back to retest this level here, this area here, and go down. It even came to my proper 3 to 1 risk to reward and hit my second take profit. So I would have put my stop loss here, and as you can see, I probably would have been taken out of the trade, which I honestly don't have a problem with, because I got my 3 to 1 risk to reward and I'm happy, chap. There's no need to be greedy. I would have been happy. Then I could have waited until I saw this and probably have entered here, but it would have been dangerous, because as you can see, this would have probably taken me out. But because when you put a stop loss, guys, you should always put it a bit below the wicks so that it doesn't take you out before the initial move to the upside. So mine would have been here, as you can see, below the wick, so that it wasn't going to take me out, this candlestick, and I could have went with it until it touched this strong resistant area. So guys, we could have taken it both sides, both to the downside and the upside, and we would have had, and they would have both hit our take profits, and it would have been a great trading week. And if you want to get a proper sniper entry, you could have, you see, retest. It even shows you here. You see how it is here? How it shows this candlestick here. It's not showing properly, but if you had to go to the 15-minute, sorry about that, guys. You could have seen it properly and entered here. Snapper entry, no problems at all. But yeah, guys, you saw the opportunities that we could have taken. I'm happy. I'm not complaining, because what I kind of predicted happened. And yeah, well, actually, I don't think I predicted this, but I am happy that that we were able to see what we could have done better and the trades we could have taken, because this recap is for us to see what we can do better the next time we are in this pair, and what to look for the next time we trade. So now let's go to EURGBP. EURGBP on the weekly, as you can see, it's in a support and resistance. It's ranging, and As you can see here, this candlestick, it's a reversal candlestick. And all the time, most of the time when you see such candlesticks, this candlesticks needs to be, the wick needs to be filled, you know? And because it's in this structure, something just told me that just looking at it, it was supposed to go up and touch here, as here it never touched properly. But then also need to go to the smaller time frame to check it properly. And as you can see, it's in a range. It's in an area which it's ranging. As you can see, it hit here and it's respecting this area here, and it did a false breakout. And I didn't want to enter here as I wasn't sure, so I wanted to wait until I saw a proper confirmation, a proper confirmation for me to get in. And as you can see here, here's a nice reversal candlestick. But let's go to the lower time frame to be able to see the structure much clearer. You see, if I had seen this lower time frame, look how clear it is. Doji, guys. Doji candlestick. Oh, next to the resistance, by the support. You enter here. You put your stop loss below the wick. Then you say to the top. But even better, you say a 3-to-1 to reward ratio. It would have been hit, guys. You see, it would have been hit. It would have been hit. So that's an opportunity that we missed. But because I missed this, and as you can see here, there's an area, there's a ranging area here that you'll probably only be able to see at the lower time frame. As you get here, you realize it's been respecting both support and resistance. So I knew that I wanted to enter. Once it hits the support, I wanted to enter and take it to the top. But this is a small area. I should have known that this probably could have been a intraday trade, even a scalp. So I'll go to the 15-minute chart just to make it even clearer. As you can see, this is a perfect entry. Look at this, a reversal candlestick. That is a morning star. And knowing morning stars, always enter. When you see a candlestick, a reversal candlestick, you should try your best to enter on the candlestick that comes after it, because you understand that is going to have a change of direction. And this is where we could have entered and put our stop loss obviously below the wicks, and this would have been a tight one, guys, a tight good stop loss, and we could have used the 3-to-1 risk ratio. But as you guys saw, as we get lower, I'm still not familiar with how the risk reward ratio works on MetaTrader, but the risk to reward would have been perfect. It would have been great, and it would have hidden our take profit. So the two opportunities that we could have taken advantage of, you know. So the next time we should be aware of such. And I'm really happy. I really cannot complain. But you know, as you can see, guys, that trades that, you know, they are valid, but they're not valid when you're swinging it, and there are trades that are valid when you are intraday trading or scalping. So for me, that's why I prefer swing trades, because I understand how many pips you can catch out of it. And if you find the proper entry from one trade, guys, you can really gain a lot of pips, instead of, you know, being an intraday trader and getting in and getting out, getting in and getting out, which can make you catch less pips than you could have, you know. So that's it for EURJPY. Let's go to USDJPY, and it's going to be the last one. As you can see, it's in a downtrend, and within the downtrend, it's in a channel as well. And I was waiting for it to come hit here. That was my plan, honestly. I was waiting for it to come hit here. Then after it hit the support, go up. But let's go to the daily. Oh, guys, see this? See this? Perfect, perfect, perfect. What would you call this? You would call this uh, a piercing line. Yeah, it's a piercing line. Let me just check for you guys and make 100% sure. Yes, it would have been a piercing line, a great one. But the problem with me is it didn't come in touch here, so I would have been a bit skeptical. Honestly speaking, I would have been a bit skeptical. Then now we go to the 4th hourly, and as we go to the 4th hourly, I also wanna mark the day, the week when the week started, 4th July, on the 4th. Just to be proper. Yep. Okay, I spoke about that. Yeah, guys, and looking at the market, what did I write here? I was waiting actually, yeah, guys, for it to come touch here and go up. And if I was able to have been able, if my tools and resources were okay for me to be able to track this, I would have been able to see this break of this higher high here when it was starting to make new higher highs and higher lows. And as you can see, it broke through, made a higher high, it corrected, and when it touched this level, I could have entered here. I could have entered here, and for me to be able for it to support me 100%, I would have went to the lower time frame so that I could find a proper entry. And as you can see, look at the candlesticks here. Those are reversal candlesticks, reversal shooting. This is a morning star, and I could have entered a long position here. I could have entered here once it passed there and put my stop loss below the wicks for some air so it doesn't knock me out. Then my 3 to 1 is to reward 3 to 1. And also, let me just check here. This would have been the previous week's high. Then I'll go to the daily. Knowing that this has the previous week high, I could have actually put it here. But because of my 3 to 1, I would have locked my profits once it got there. Yeah, once it got here, I could have locked it. But as you can see, it went a bit up, and I probably would have made this my second take profit and had gotten out of the market. And if not, it was just going to take me out here, but I would have been happy because I've locked my profits. My 3 to 1 risk reward ratio was on spot, so yeah, I would have been happy, and this would have been a wonderful trade. That my strategy, guys, there's so many elements to it. There's like, I have a support and resistance strategy, I have a breakout strategy. There is so many strategies that I use because I feel like the market has so many elements to it. So sticking to like one element, it might disadvantage you because you'll miss a lot of opportunities, but because my eyes before learning the strategies were able to see these opportunities that the market is just, I couldn't describe it. I was able to see how the market reacts and what the market does and what one should do to be able to catch that. So my strategy isn't complicated. It's just that it is so diverse. It may seem complicated, but it is not. This is a support structure, and this would be the resistance structure. It may not look like your typical channel or like your typical and it looking like this, the way people expect it to look, like it's in a range, like that. You know. So imagine if I had to wait for it to be like that, I basically wasn't gonna take this trade. I honestly wasn't gonna take this trade. But because I know breakouts as well as part of the multiple strategies that I have, I was going to retest here. Breakout, retest, go up. And that would have been a great trade that I would have been very much so happy about, and I'm not complaining. And as you go to the smaller time frames, it shows you that I could have even entered as far as here, like as it hit there, I could have entered. Snapper entry, I could have entered and covered more pips, But as long as we see what we could do better and we are aware of this happening with the USDJPY structures like this happening, now that I'm aware, the next time I see a structure like this, probably do that. And once it breaks and breaks, retest, take it and go up with it. Or as you can see, guys, there's so many ways I could have done it, but now we know for next time and we have written it down. So we've come to the end of the video. I would like to thank each and every one of you for watching the whole video and getting to this point. I know a lot of things and the way I explain might be complicated, but I'm trying my best to make it very simple, guys, very simple. And this, guys, it's my trading plan, basically, guys. I'm showing you guys my trading plan. Y'all are seeing, the reasons why I take my trades, what confluences I'm using, what signs I'm using for me to enter those trades, and what I'm waiting to see develop for me to be able to enter, and all sorts of things, guys. So I'm still learning candlesticks, still trying to memorize them, but I know that you can see the gist of the candlesticks that I can notice, that I know, okay, this one is a reversal candlestick, and when there's a reversal, I know that it's a change of direction. There's a possibility of change of direction. So I want you guys to keep on watching all my videos, because you're going to learn how I take my trades and how I develop a way of how I'm going to take a trade. Yeah, guys, thank you for watching. Please don't forget to press the subscribe button, the like button, and the notification button, so that we can get to a wider audience. And also, please leave a comment below and tell me what you have learned, what I skipped here that you didn't see, that I didn't see and notice that I skipped while analyzing. And also, just comment what you guys want to see, and ask me any question that you have, and I will answer it in the best possible way that I can. From the FXmosako family and Mr. FX, I would like to wish you a prosperous trading day. Peace.